Hello guys, give me 1 second and I'll be with you. Welcome to the Nailing FX and Crypto. Give me a second, I just want to make sure I have all my chat boxes up and ready so I can see you guys and say hello as you guys say hello to me. Okay, so let's put that there. Alright, lovely. Let me just come on the camera so I can wave at you guys. Hello. Brilliant. So my name is Becky. I'll be taking today's session, Nailing FX and Crypto. So we'll be looking at both or just one or the other, depending on if you guys have specific suggestions or specific things you want to look at. Just want to have a look and check that my tech is okay. My second screen is being really temperamental today, so it may be that it shuts off and then flashes and we'll have more things on this screen and then I'll have to sort that out, but I'm fingers crossed we won't have to do that and we'll be able to have a smooth session. Okay, so my email address is becky@tradictiv.com. There's also support@tradictiv.com, which you can see here. Those are our email addresses. There's also a link you can go to, tradewithufos.com/Becky. That brings you here. You can set up a free Trade with UFOs membership, and then you can come down here and ask a question in a public space. And that way here you'll be able to see questions and answers that people have done before, and you'll be able to post a question as well where other people will be able to see the answer. So it helps us all learn from the same place. Now if we come back here, just want to make sure that we cover the disclaimers before we start. So there we go. Disclaimers are there. Of course, for legal reasons, it's important that you guys read them, but also to understand that these kind of videos are demonstrations and don't necessarily indicate the results that you may receive. Okay, so we do Nailing FX sessions on our YouTube channel, and of course this is also streaming in other places as well. But we also do these sessions. Oh, there you go. It's gone black. I know it's come back. It's come back. We're okay. So with these sessions, we do them on our YouTube channel, and we also do them on FX Street. Again, guys, I'm really sorry if today's session, it might be a little bit stop and start where my screen keeps going blank and coming back up again, which means, again, it might flip things between the screens. I don't know what's happening here today, but fingers crossed, okay? So we've done some on our YouTube channel. We've done some on FX Stream. So the trades that I'll go through today, some of them have come from our FX Street session. So we'll just check that out and see what's going on with those. So first things first. Let's check these this session. So this was an FX Street session, which we placed on the 11th of August. So here is a short where we were going to buy here, sell here if we're wrong. So that was our stop. Sorry, I'm going to say that again. Sell here, buy there if we're wrong. That was our stop. And then we had our targets. So as we can see, this one worked out and we would have hit both of our targets. So price came in at this point, went down, hit our safety target, and then hit our final target. Now, just to check that definitely that would have worked out that way, if I highlight the date here, so we hit both of our targets on the 12th of August, the day after this was placed, and we still would have had a downwards climate. So we still would have been in this trade. We wouldn't have had any reason to cancel this trade, and therefore that worked out for us as a profitable trade to the downside there, Australian dollar versus Canadian dollar. Now we also looked at the dollar Swiss, I believe. Dollar Swiss, let's have a look here. Perhaps not. Perhaps not. Maybe it wasn't the dollar Swiss, might have been another one. I can't remember now, but I thought we had another one on, but we definitely had that one as a winning trade. We may have very well had another trade that would have been a losing trade. You guys can obviously go and look at that video. It's on YouTube as well, but posted by FX Street to see which other trades that we had and how they went. So just to come back once more to here and just explain to you what the situation is with these videos. So we'll look at the current market environment. We've just looked at some closed trades. We'll look at how we would manage open positions, although from what we've seen, perhaps I analysed one, but actually only placed one trade because I could swear that we put on a trade on the dollar Swiss, but apparently not. So we've done those bits. We'll now look at new opportunities. But as we know, we are streaming in many different places. So we're streaming on YouTube, Facebook, LinkedIn, Twitch, other places as well. Those are all accessible for free. So you guys are watching this either live or recorded, and you're watching it for free on those sessions. We are also streaming inside our live closed environment. Now, in that closed environment, people are paying a monthly fee to have access to that. Now, what's the difference between the free and the paid for? Same content, we're still going through the same methodology. We're not holding back in terms of what the strategy really is or anything like that. We're completely transparent in what we do. But the people that are paying to be in our closed environment are paying to have more of our time in a closed environment. So what we do is we'll cut the stream. Normally after we place at least one trade, we'll cut the stream that goes out to everybody and continue in the closed environment to place more trades and look at more opportunities, answer more questions within that environment. So at some point I will be cutting the stream. So without further ado, let's crack on and have a look at some new opportunities. And again, sorry about any tech issues we have today, guys. I did buy a new cable, so when that arrives, this won't be a problem. But anyway, okay, so let's come back and let's have a quick look at the FX Street economic calendar. And we look at this, and what we're going to do is we're going to filter by most major markets that we trade, or most major markets that we would trade the currencies on. There we go, and Switzerland. I'm only ticking these because these would be the currencies that we would use. So we'll do those. Oh, that didn't. Here we go. So just to summarize here. So I'm not ticking Germany, France, Italy, because they're all within the euro, right? So for some reason, I can't see where I can click OK or click update or something with that there. So that's not quite filtering. That should be working, but it's clearly not. Okay, I was going to say we'll look at the FX Street economic calendar so that we can see if we have upcoming news events on the currencies that we'll be trading, so that we can perhaps avoid the ones that seem to have news coming up. Now, to be fair, we don't make decisions based on the news. We don't care what the news says, whether or not it's an impression that it's going up or down. We care what the technology says, and that's what we use. So it's not the biggest deal that we can't load that, or perhaps it's me being stupid and my tech issues are going a step further today. So don't worry about that. But if you can get access to the economic calendar of FX Street and have a look at those currencies, it might give you an idea of which currencies might be seeing a bit more volatility. So what we'll do is we'll come to TradeStation, and we will use this scanner as a way to figure out what we're going to be trading, what we're going to be looking at. Now this scanner, for those that might not have seen it, this scanner highlights, you can see yellow boxes. Those yellow boxes are telling us the currency pairs that are close to a good entry point. Now the good entry point is defined by the rest of the methodology, which is essentially programmed into this. So it's showing us where we have opportunities that are close to entry, so that we don't waste time placing trades with opportunities that are far away from our entry, where it's got more time to change things around. We'd rather be getting into trades sooner rather than later. So we want to look at the near ones. But you may notice that some of these say hopeful and some of these say sensible. Now, if we're a trader, we don't want to be hopeful. We want to be sensible. So we focus on just the sensible ones. So that means we'll take out this one, and we'll take out this one, and we'll take out all of these three. So we're filtering down even more. So we're looking at only the yellow boxes that say sensible. One more thing we want to look at is we want to check that this column here, see, we have blue boxes, red boxes, and grey boxes. Red boxes tells us we have probability to the downside. Blue boxes tell us we have probability to the upside. Grey boxes tell us we don't have enough probability either way. So we'll avoid the grey boxes because we don't want to be trading where we don't have probability. So we'll take out this one, we'll take out this one, we'll take out this one, and we'll take out this one, and this one. So on this top bit here, we're left with just the one. We're left with just this one as one we're going to look at for that time frame. For down here, we'll take out this one. So that again just leaves us the one to look at. And over here, we will take out this one. So what we're left with is 1, 2, 3, 4, 5 opportunities to look at across different time frames. So out of all of the currency pairs you could trade on all of the time frames, there's only a few really that are worth looking at in terms of close enough to a probability with confirmed probability either way, up or down. That is a sensible thing to do, not a hopeful thing to do, meaning you still have room for it to continue, you still have room to make profit on these trades. So using this scan helps us to save time rather than going through all of these. You can go through all of these one by one, nothing wrong with that, it's just going to take you longer. We use these TradeStation scans just to help us out a little bit. So we'll start with the bigger time frames and work our way towards the smaller time frames. So as we see here, we have Euro Canadian on a daily climate, and we have dollar yen and dollar Swiss on a daily climate. So we will look at those. So in fact, actually, since I'd been pausing the screen, we've actually lost the dollar yen as an example because it looks like it's actually already hit now. So we'll look at the dollar Swiss and we will look at the Euro Canadian. So that's what we're going to look at. So dollar Swiss, we're already on it. We want daily on the left hand side, 55-minute on the right hand side. We'll get rid of the order panel for now. Now, if you don't have a 55-minute chart, if you only have 60 minutes, that's fine. There's a very slight difference in the probability. Usually, the time frames that coincide with Fibonacci numbers tend to give you a slightly better probability rating. It's not massive, so if you can't get a 55 and you can only get a 60, that's fine, stay with 60. So what we see here on the dollar Swiss is we have, by the way, we don't have an opportunity to trade on this one, I'll tell you why. We have a thick red dot, that's probability downwards. If we're going to sell, which is what this is telling us to do, there's probability down, we should look to sell. Then we want to be finding UFOs that are red. These are the UFOs. This is where we're going to actually be selling. So the climate on the left tells us whether or not to buy or sell, and on the right tells us where to buy and sell, and we use the UFOs for that. Now we have a sell UFO on here, but we want that sell UFO to coincide with the EMA number from the bigger time frame, because that way what we're doing is we're combining, let's use a different color, sell orders with sell orders at the EMA, because if price is below the EMA, then there would be sell orders then. So you're combining sell orders with the UFOs, sell orders with the EMAs, in conjunction with a climate that's going to the downside, more sell orders. So selling with selling with selling gives us more probability that price goes down, which is if we're selling, that's what we want it to do. Now it's not coinciding because this EMA value is 0.9152, which is around about, actually just below current price right now. And there are no UFOs around that price. In fact, they're really, really far away. So they're not lining up, in which case, no point trading them. You can, if you want to, you might not follow this methodology exactly or be that strict with it. You can just trade the UFOs or just trade the EMA. We trade both because having two sets of variables that co-align with each other increases probability. What it decreases is the amount of trades that you can place, because we're stricter with our rules. We have to have two sets of variables that line up. If we only needed one set of variables, well then you can place a whole lot more trades, but those trades might have less probability. Overall, if you still make money, great. Do whatever strategy works for you. For us, we are being stricter here in order to increase our probabilities. So nothing on the dollar Swiss for today. Now we can look here at the next one, which is the Euro Canadian. So let's have a look at the Euro Canadian. Same time frames, and we'll drop time frames as we go. Now what I'll do as well, let me just come over here to the chat box on this and just see who's with me. If you guys have specific currency pairs you want me to look at, specific things you want me to analyze, just let me know. Otherwise I'm going to be sticking to the scans so I can be more efficient with what we look at. If we get to the end of the scans and we find that we don't have good opportunities, then by all means we'll just look at different currency pairs and perhaps place trades that might be a little bit further out, just to be able to show you the methodology. But again, you guys let me know in the chat boxes if you have anything specific that you want to be looking at. Okay, so let me put the brightness up a little bit there, because I know I'm a little bit dark. Cool. So let's see what we have here. It looks like we do have an opportunity, so let's get this one on. Let me explain why very quickly. We have a thick blue dot, that's probability upwards, meaning we have more buy orders pushing price up right now. We have buy orders here, buyers within this green UFO, and we have our EMA at 1.4762, which is within this UFO. So we have those three things lining up. Confirmed upwards probability, or confirmed upwards climate, so upwards probability, buy orders and buy orders. Buy, 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 we buy. So let's place this trade. What I'm going to do first is just draw around this area, just so I can keep this on the chart so we can see at a later date what would have happened with this. So first things first, how are we going to get our entry and stop and things like that? So we're going to take these green boxes as our references because these are referencing the price that we see on the UFO. I know it's not right next to the UFO, but that's just because TradingView is trying to line up all these different boxes so they don't necessarily always look like they're next to it. It's the prices that are important. Those top green boxes, the first two green boxes, are the prices that are relevant to this UFO, meaning this is showing us between these prices is where we have buyers. So the top number is 1.47668. So I'm firstly going to round that up to 1.4767. Then I'm going to add a couple of pips. So it's going to be 1.4769. That's going to be our entry. I'm adding a couple of pips to take account of the spread here. Now our stop loss, we're going to take that bottom number, which is 1.4756, and we're going to round it down. Oh, it's 1.47568. So we round it down to 1.4756, and then we're going to take off 5 pips, which is 1.4751 would be what that is. So 1.4751. That's our stop loss. Notice, since I've drawn that, on the left-hand side here, we can see very clearly that our EMA is within our UFO. So we're having those things line up. So brilliant. That's going to be our entry and our stop. Now, where are we going to put our targets? The first target is very easy. It's going to be 1 to 1 away. So we'll work that out very quickly on the order panel. The second target is going to be up here. Our final target is going to be up here at this red UFO. So we're going to again use this red number here, 1.52013, and we're going to round it down to 1.5201, and that's going to be our target. Why? Because if we have buy orders, and buy orders, buying and buying, the only thing that can stop that is lots of selling. So on this time frame, on the bigger time frame, the closest stack of sellers is all the way up here. Now, let's be realistic. It's likely we might see a small move and then new sell orders could come in to the market. It's got a long way to go before it gets up here, so it's more likely that we might see something like that happen. Well, at that point, perhaps we have a trailing stop to capture it along the way. Perhaps we would close out of the trade because the climate would change or something like that. I would anticipate it's unlikely, to be honest, to go all the way up here, especially quickly. It may do. So if it does do that, we want to capture as much as is possible that we can see on the chart right now. Otherwise, we've got our safety target anyway, which will lock in some profits and therefore keep us safe from a loss. And then we may have different trade management techniques that would help us. So I'll explain those once we put this on. So the first one, our safety target, is going to be 1 to 1 away. Really easy. So if I click buy and then I put in 1.4769, click on my stop loss and I put in 1.4751. That's worked out that that's 18 pips of difference. So I'm just going to click take profit and put in 18. You'll see this number here has gone to 1, meaning it's a 1 to 1 trade, 1 to 1 risk to reward. And it's figured out the price for me, which is 1.47. Let me draw it in the chart. 1.4787. There we go. So that's going to be our safety target. Really, really easy. Now what I'm going to put in here is $50. I'm going to risk $50 on one target, $50 on the other. So overall, $100 worth of risk. I've picked that because it's a nice round number, easy to break in half. You guys, of course, might risk less than that, more than that. That is 100% up to you, how much you risk, if you risk anything at all. So there we go. That's gone in like that. And then we'll put in our second target as well, which will be 1 point. It's the same situation. 1.4769 is our entry. Stop loss is the same, it's remembered it. And our profit, we're just going to type in this number, which is 1.5201. Again, risk $50. And there we go. That trade has gone in. So that's us going through this methodology, figuring out from the scans on TradeStation, where do we have better probabilities, what's worth our time to look at, analysing a situation, and in one case we looked at it and said, it's still not lining up. In the next case, we looked at it and said, great, it is lining up. Let's put this trade on. And it was lining up because we had the climate pointing upwards, we had buy orders close by, and we had the EMA number coinciding with those things. So 3 separate things, all lining towards buying being the more probable thing to do. If we're wrong, we have a stop loss to keep us safe. That line there, if prices to come down, we'll get stopped out. We'll lose $100 overall, which is what we've decided we want to risk. If we're right, and it goes all the way up here, and it goes all like that, brilliant. Then we'll take profit at our first target and we'll take profit at the second target. Happy days, lots of money. If we're somewhat right, then price goes up a little bit, for example, hits our safety target. So we've made $50 then. Then let's say it comes back down straight away. Well, then we've made 50 and lost 50. Overall, 0. Break-even trade. So what we've done by putting that safety target in is reduce the chance that we're wrong. Because even if we're only right a little bit and price only goes a little bit in our favour, we're still protecting ourselves. We're still not losing. We don't make anything, but we're not losing. Probably, like I said, more than likely, and let's move this to the side here to kind of try and make the point, expand it. More than likely, we're likely to see that price might go up, move a little bit, and maybe it does some of this, maybe it does when it comes down quicker. But I doubt it's going to go all the way up here because it's a long way away and a lot can happen in the time that it would take to get there. More than likely, we will see new sell orders come in. So what we might do as a way to protect ourselves here is if we see new sell orders come in, cancel the trade and get out at a profit whenever that may be, and check in on the trade every day. We may check in on the climate. So all the while the climate is still a thick blue dot. I'm going to draw them out. Not very well, but let's say at this point it's now a thin dot or it's a red dot. Well, we get out at that point, whatever the price is. Hopefully at a trailing profit. You could also trail your stop behind new UFOs that are formed. So let's say, for example, oh, didn't mean that. Let's say, for example, price moves up. My screen is flashing at me, by the way, guys, so sorry if I seem distracted. Price moves up and a new UFO is formed here. Well, great. What we do at that point is we'll take our stop loss from here and we'll put it here. And then price moves up and a new UFO is formed here. Great. We take our stop loss from here and we put it here. So that's one way of managing the trade. So that's 3 different ways I've given you there that you could manage this trade on its way to that final target. If it does reach it, brilliant. If it doesn't, there are ways that we can take profit on this trade without it needing to go that far. So one of them is trailing our stop, moving our stop behind new UFOs that form on the smaller time frame. There's also cancelling the trade at a profit or a loss if the climate was to change. If it's no longer a thick blue dot, we no longer want to be in the trade, we get out of the trade. Or if we see new sell orders appear on our bigger time frame, then maybe we use that as our target and we get out at that point. So that's 3 different ways you can manage this trade. I'm going to put a little note on to remind me. So this was placed 18th of August, YouTube. I know we're in other places, but YouTube. Okay, so we have now placed one trade. So what we're going to do is cut the stream to the free places that you guys are watching. So that's YouTube, LinkedIn, Facebook, those places. We'll continue in the closed coaching community where we can look at new trades. Hopefully it made sense. I know I went through it a little bit quicker perhaps than I would normally, but for those of you that follow us, perhaps that was easier because you weren't listening to the same thing over and over of the explanation of each step of the methodology. For those that this might have just so happened to be the first video of ours that you've watched and you've clicked on it, if you're confused about anything, by all means email us. We're happy to help. If you email becky@traddictiv.com or support@traddictiv.com, or you can go to tradewithufos.com/Becky, get yourself a free membership and then post a question here. I'm happy to answer it there, so again, other people can learn from those questions. So you've got multiple ways that you can get in touch with us if you have questions about what we've gone over. But at least we have a trade example, and next time we're on, we'll catch up on what happened with that, whether or not we won, lost, it broke even, and how we might have managed that trade. So I will see you guys next time. For those of you that are in the closed coaching community, give me a sec just while I go and turn off these streams in other places. Just wait there for me. I'll be with you. I need to do them one by one and it takes time. So give me a sec. I'll do that and I will carry on there. Otherwise, guys, for those of you watching on YouTube and etc., have a good rest of your week and see you soon.